Grade 8, welcome to this lesson. All I'm going to do in this lesson is discuss the informal assessment that you did last week and during this week, and you marked it as well. I'm just going to explain how each of these accounts fit into the accounting equation. All right, I'm sure you've gone through the memo and you've marked your answers. Now I'm just going to explain exactly why they fit where they do. All right, I'm showing you this accounting equation that I gave you a couple of weeks ago. You must keep this always nearby for now and in future when you have to do anything regarding the accounting equation, because it will help you to classify the different accounts. All right, so let's begin with this informal assessment. I'm just going to go through it and I'm going to just show you where I got my answer. Okay, the first one has been done for you, rent income. All right, it's a type of income, and if you look at the accounting equation, then you will see that all types of income fall under owner's equity or just equity. Okay, and then you will see rent income is a type of income. All right, that's why it's equity. All right, the next one, loan. You have a loan from FNB, and you know that if you have a loan, it's not preferable. You don't prefer to have a loan. It's something that bothers you. Okay, it's a liability. It's something that nags at you. You have to still pay me back. Remember to pay me back. Okay, so that's why it's a liability. As you can see, it's a type of long-term liability because it's a long-term loan. Okay, the next one, a vehicle. A vehicle costs a lot of money. It helps your business to reach its goals, and as you can see when you look at the accounting equation, it's a type of fixed asset, and vehicles right over there. That's why you will classify it as an asset. The next one, stationery. Okay, this is something that you frequently have to buy. Okay, it's not a long-term cost that you have, it's an expense that is short-term. Okay, and therefore it's a type of expense. You can see here the expenses. Stationery falls under expenses. All right, and that has an effect on equity. Okay, firstly. All right, the next one, rent expense. Okay, it already tells you expense, and all expenses, as you can see here when you look at owner's equity, all expenses falls under owner's equity. All right, so then you can just put it over there. The next one, rent income. Now you would, I see where I did there. Rent income there, rent income there. That's funny. I just noticed that. Anyway, rent income, all types of income also falls under owner's equity, as you can see. All right, so that's owner's equity. The next one, creditors. It's a short-term liability. It's something that you have to pay in the short term. It's something that bothers you in the short term. That's why it falls under liabilities. The next one, equipment. It's also a larger amount of money that you will pay. It is for something that you want to keep for longer than a year. That's why it falls under assets. As you can see right over there, equipment. It's a type of asset. The next one, I put there in brackets, it's a positive bank balance. It's a positive balance, so it's something that's an asset for you. Okay, now the opposite of a positive bank balance is a negative bank balance or a bank overdraft. Okay, and that counts as a liability in the short term, as you can see right over there. So it's a liability. All right, I know I went through it pretty quickly, but I hope you can see how I have used this table right over here to guide me in classifying the different types of accounts. All right, thank you for listening. Keep a lookout for the next lesson on Google Drive. All right, I hope you have a good week further.